Hi, this is Max Keiser. This is the Keiser Report. You know, censoring has taken on a whole new dimension in the age of new media. I'm talking about Twitter. Let's bring in Stacy Herbert to give us the latest. Stacy Herbert.
Exactly, Max. Did Twitter censor the flotilla hashtag following the Israeli attack? Users of the microblogging service complain at apparent censorship as discussion grows around deaths on convoy disappeared from trending topics. So, you know, on the sidebar of Twitter, there's a trending topics, and the items that people are mostly talking about is at the top. Now, Twitter itself has come out and said on 2 occasions that they have manipulated this. Once during the Iran election hashtag, so-called Twitter revolution, where they said that the State Department contacted them. And then recently with Justin Bieber, who is a big amongst teenagers around the world. They were tired of seeing his name at the top of the trending topics, so they removed him.
You know, this is an example of algorithmic propaganda. You see, it's very interesting because, in other words, by Twitter, by manipulating the index, which is what this represents, that sidebar, which has trending topics, it's exactly the same as we see on Wall Street when stocks like Procter & Gamble, which is part of the Dow 30, if you can manipulate Procter & Gamble, you can manipulate that index, and you can manipulate the entire market because all the computers are tied into those indexes and those prices. Price signaling, price manipulation. So Twitter is equally culpable in propaganda and news manipulation, just like the folks down there on Wall Street are manipulating markets through price manipulation. So ideas and prices are being manipulated to create a very unlevel playing field. If you have a lot of technology or a lot of cash to manipulate prices, you are dictating the news cycle and you are destroying any possibility of there being a fair and equitable discourse in the public domain, except on this show, of course, the best show on television.
But I want to move on to the big theme of the show, and that's clowns to the left of us, jokers to the right, and some robots. The first headline, Best Party Wins Polls in Iceland's Reykjavik. So there were local elections in Reykjavik, Iceland, and the Best Party won. It's founded by comedian John Nahr, and they secured 34.7% of the vote, which puts him on track to become mayor of Reykjavik. Now, his campaign slogan was, whatever works. And his campaign video featured candidates singing to the tune of Tina Turner's Simply the Best. But their key pledges included sustainable transparency, free towels at the swimming pools, and a new polar bear for the city zoo.
Yes, plus I also recommend that they get Max Keiser Minimax action figures for all the people in Reykjavik as a way to put a face to their protestations. This Minimax action figure should be available to all the folks in Iceland, all the folks in Reykjavik, as a manifestation of their displeasure.
Yeah, Max, that is a good point, because why not have your own little doll to present the economic news, to talk about the economic clowns? When this is exactly what John Nahr is doing. His point is that why not elect real clowns rather than this political insanity of what we have at the moment?
Right. Well, it's a hedge against clowns by electing real clowns. So you need a clown hedge.
Exactly.
I'm surprised Goldman's not already introducing clown collateralized backed mortgage clown obligation bonds.
Well, John Nahr himself says that his party, what he is calling anarcho-surrealism, government and opposition leaders alike warned against putting the city in the hands of what they characterized as clowns at a time when Iceland is mired in economic crisis.
Clowns are why the city is mired in economic crisis. The bankers in Reykjavik, as we know because we talked to them, they are clowns. They are incompetent. They are at best incompetent, but as we suspect, they're more on the order of...
Well, in fact, Max, you were there in Reykjavik and you spoke to the chief economist of Kaupthing Bank, which collapsed because it incurred debts 10 times the size of the Icelandic economy. At the time, we spoke to them and the chief economist said, well, Icelandic people are 3 times more productive and powerful than other workers around the world, and that's why it all makes sense.
Well, remember, in the circus, they have the clown car, where the little car stops, and then 20 or 30 clowns pop out. And that was the Icelandic business model. The little car of the Icelandic banking system came to a halt, and 20 or 30 times the GDP of the entire country popped out of the doors in the form of leveraged loans that were made to other bankers in the UK to buy even more leveraged purchases of companies, and escalating the global credit crisis, which of course blew up in 2008, in large part because of the clowns running the Icelandic economy. So this new party in Iceland that is, what do they call it, the best party? Of course, I support them, as does the Minimax action figure.
Well, speaking of blowing up, of course, the BP oil spill in the Gulf of Mexico blew up many weeks ago. And let's look at how the so-called grown-ups, i.e. the non-clowns, are controlling this situation. First headline on this, Mike Mullen, oil industry has better technology for BP oil spill response. So let's turn to this video, and this is him talking to George Stephanopoulos.
So there are no Navy submarines, no other materials, technology that you have, robotics, that could do a better job at shutting down that leak than the BP technology?
We've looked at that continuously since the leak started, George, that whether or not we would have submersibles that would go do this, and in fact, the technology, the best technology in the world with respect to that exists in the oil industry.
Of course the oil industry has more technology than the military, because they're the ones who have been getting all these free subsidies from the global banking system.
Or you might say, Max, the U.S. military spends $1 trillion per year on record. Who knows what the black budget is? But in fact, they spend $1 trillion. Now, he's saying that with that $1 trillion, they have less advanced technology than what the oil industry does. And we know now the BP is on their fifth response to the oil spill. Previously, they used golf balls and tires. And that is what Admiral Mike Mullen, the chairman of the Joint Chiefs of Staff, is saying is better technology than what the U.S. military has?
Right, well, the U.S. military, so you've got a Ponzi scheme. The U.S. military meets incompetence at British Petroleum, trying to shoot golf balls into a hole to stop this catastrophic oil spill. I wonder what the penalty would that be if you had your drive went into the Gulf of Mexico and failed to stop a catastrophic oil spill. I think that's definitely a 3-stroke penalty.
What if it did plug the hole?
Oh, that'd be a hole in one.
So here is Admiral Mike Mullen saying that we, the U.S. military, are unable to control this but the oil industry has much better technology. This scares everyone that we can't make it stop, says BP chief. So here's the chief operating officer of BP, Doug Suttles, and he says, quote, this scares everybody. The fact that we can't make this well stop flowing. The fact that we haven't succeeded so far.
Well, that's the definition of a nightmare, isn't it? It won't stop. It just, isn't that right, Minimax?
Yes, that is the definition of a nightmare.
You see, oh my gosh, it won't stop. It's simply out of control.
As he admits, they can't stop it flowing. And just to put this into context, there is a second relief well being drilled, and it's been being drilled for the last month or so. And it'll be done by August 2nd, at which time the U.S. Geological Survey says that 2.2 million barrels, or 95 million gallons of oil, will have flooded into the Gulf by then.
Look, unfortunately, the business model of BP is not to conduct their business in any way that's commensurate to the true cost of exploring for oil and gas. They don't pay the true cost for oil and gas, so they can afford to take this kind of risky behavior because their entire model is subsidized by the chumps that are the global consumers of their highly toxic, impractical product. So, of course, it's moral hazard as applied to the energy industry. They're not going to be penalized. A slap on the wrist. That's it.
Yeah, plus, as you've mentioned, Max, that this is peak oil. Basically, this is what happens with peak oil. Many people have always argued that, peak oil is not going to happen because we're not going to run out of oil. But that is not, in fact, the case. What happens with peak oil is that it becomes highly dangerous, highly expensive to extract. And this is the expense of extracting it.
Right, that is the definition of peak oil. You need to go to riskier places to get oil, and you're taking these huge risks. And these accidents are bound to happen. And it's been obvious for decades. This has been predictable for decades. And it's only going to get worse. The fact that BP and these other ExxonMobil and these other oil companies do not actually pay for the true cost of exploration and exploitation of these natural resources means that this will not stop until they're actually forced to pay the true cost.
So Matt Simmons, who is a very famous oil analyst, is also calling for nuclear weapons to be used against the oil well because every other attempt is failing.
Well, Matt Simmons is the guy in Dr. Strangelove. If you remember, he's straddling a bomb from an airplane and going yippee-yi-yo, as he's about to blow up the world. That's who Matt Simmons is. He's Dr. Strangelove's nuke-obsessed sidekick.
Well, speaking of true costs, let's go on to last weekend. The cost of war, $1 trillion wars. That's as of 10:06 a.m. on Sunday, May 30th. We will have spent $1 trillion in Iraq and Afghanistan. So the cost of these wars in Iraq and Afghanistan has now hit $1 trillion. 1,000 soldiers have now died in Afghanistan and 5,000 in total between Iraq and Afghanistan. And yet they have still not managed to secure the cave.
Now, let me give you a quick lesson in economics. In other words, Wall Street banks, they create or lend into the system trillions of dollars worth of fiat currency in order to better pay themselves these huge bonuses at the end of the year. That money would create inflation and devalue their bonus if in fact they didn't also create concomitant events of deflation. So to blow $1 trillion on these wars is a way to keep all the fiat money they're paying themselves via the bonuses from lowering the purchasing power of that money through inflation. So everybody who's involved in these wars is helping the bonus money that Goldman Sachs and JP Morgan are paying to themselves keep its relative purchasing power. That's the only purpose of their mission in Afghanistan and Iraq, is to keep the purchasing power of Goldman bonuses intact. There's no ideology. There's no real reason other than that. It's all economics. They're creating an artificial deflation to keep the purchasing power of these extraordinary bonuses intact, and that's it.
So $1 trillion is unable to secure a cave. It's unable to secure a leaking well. And all of these people who you're talking about in invading countries in order to secure their bonuses are meeting in Toronto at the end of next month. There's a G20 and G8 meetings June 25th and 27th, the end of this month. Headline reads, Summit Security Tab Beyond Rational Explanation. So, speaking of clowns and irrationality, apparently the total security cost for the G8 and G20 meetings will now top $1.1 billion for a 16 hours worth of meetings.
Again, they have to find a way to throw $1 billion away, or else all the inflation that they've created to pay themselves the bonuses would decrease the purchasing power of those bonuses. So they simply blow it on $1 billion. There's no economic justification at all. It's pure market rigging. It's pure insider trading, market rigging, and of course it's scandalous, and it's destroying the global economy, and it's happening in real time, and we cover it right here on this show. Stacy Herbert, thanks again for being on the Keiser Report.
Thank you, Max. Thank you, Mini Max.
Oh, yeah, Mini Max is on his way to the G20 meeting.
Stay right there. Coming up after the break, much more of the Keiser Report.
Hungry for the full story? We've got it firsthand. The biggest issues get a human voice, face to face with the newsmakers on RT.
And we're back with the Keiser Report. Time now to welcome Edward Harrison. He's the founder of CreditWriteDowns.com. He's a former strategy and finance executive, as well as a former diplomat who speaks an incredible 6 languages. Ed Harrison, welcome to the Keiser Report.
Thank you, Max. It's good to be on.
All right, first, Ed, you started your career as a diplomat. The world is erupting in geopolitical hotspots these days, from North Korea to Israel, Turkey, Iran. What do you see as the most urgent situation going forward?
I think, from an economic perspective, the most urgent situation is probably going to be, China, U.S., because ultimately, there's a asset bubble in China. They're popping that right now. There could be some negative fallout from that. And as a result, you can see China and the U.S. shaping up in various ways around the world. China's on the Security Council. They have a veto. They can veto anything the United States does with regard to Iran. They are definitely very involved in terms of Korea, in terms of Taiwan, etc. So, long story short, U.S.-China is actually where it's at in terms of the economics feeding into the politics.
Okay, so U.S.-China is in the center stage, the ultimate match that's going to determine the result of these other conflicts. So up until recently, it's been a symbiotic relationship. China, low cost of labor, pegging their currency to the dollar, and then, of course, recycling the dollars back into the U.S. To keep interest rates in the U.S. low. That's been the story for a while. Is this breaking apart now?
I think it is breaking apart. The fact that the euro is now plummeting is probably taking a little bit of the heat off of China. But definitely because the United States has gone through some tough times, obviously there's a lot of political pressure to point the finger, especially with the midterm elections coming up. And China is the easiest one to point the finger at. As it turns out, the huge trade deficit the United States has had with China has gone away largely over the last month or two. We'll see if that continues. But, it's definitely going to be a problem. And I see that this whole sort of symbiosis, what did they call it? Chimerica, I think was the term. That's really coming to an end at this point in time. Okay,
so China is, supposed to be the bulwark of the global economy. You're talking about a bubble in China. And I think, if I hear correctly, you think their bubble is popping. And what would this do to commodities like oil?
Well, over the near term, it's going to be negative for commodities. I think that commodities are probably still going to have, a secular upwind once we see this downdraft cycle through. But clearly, China was actually, all of the industrial commodities, they were stockpiling industrial commodities ahead of time. And so if their industrial production is going to come off, which it has, then that's definitely going to be negative over the near term for commodity prices. Oil is another story altogether because, the whole fiasco with BP in the Gulf of Mexico is going to have it's not clear what sort of impact it's going to have. You can see oil prices going down, but obviously if there's some sort of reaction in terms of stopping all sorts of production in the Gulf of Mexico, you're going to have a negative impact.
All right, let's talk about the market in moral outrage, currently trading at an all-time low on the New York Stock Exchange, on exchanges all over the world. You've got the absence of any remotely competent response to the disaster in the BP or from the fallout from the Goldman Sachs, JP Morgan market rigging scandals, insider trading scandals, front-running scandals. There seems to be no public outrage whatsoever. Is this going to change? Is there going to be some, as The Economist magazine calls it, they called it social cohesion risk or social fury risk?
There's a simmering social fury in the United States in particular because really we still have 10% unemployment in the U.S. And in Europe, I think that the social fury will actually increase. When I look at social fury, I look at Europe first and foremost as the epicenter of where you'll see all of the activity. Spain, Greece in particular in terms of austerity. Even the Irish might start to balk at the increasing unemployment that they're seeing. The Irish were the first to undergo significant austerity, and they actually increased their budget deficit from 2008 to 2009. So is this austerity actually going to have the beneficial effect of decreasing the budget deficits? Over the short term, no, because it's going to reduce demand. And I think that you're going to see a very negative reaction from the people in those countries as a result of that.
It seems almost as if the banks and the governments, and they're working together, of course, it seems almost as if they'll just keep imposing austerity measures until the public reacts in a way, let's call it what it is, violently. In other words, they're poking a stick at the public, and they're saying, we're just going to keep taking your money until you do something. In other words, that's their plan. Their plan is, we'll just keep stealing until you react. Is that a fair assessment?
What's going to happen is they're going to continue to. Let's look at Greece as a perfect example here. Okay, so the Greeks basically they had a huge budget deficit, and as a result, people didn't want to buy their bonds anymore. So what happened? Obviously, scenario number one is okay, then we can default, and the people who bought our bonds, who shouldn't have bought our bonds in the first place, they can take a hit. Of course, they're the French and the German banks, so no one wants them to take a hit because they're undercapitalized. And as a result of that, you get this massive bailout, which is, taxpayer money, obviously. So eventually people are just going to scream, not only the taxpayers who are paying for this, but also the Greek citizens who are having to go through austerity as a result of those measures. So I think, you have an untenable situation, and it's only going to get worse, and it's only going to change when basically people rise up and say, no, we just can't take this anymore. It's just too much for us.
Yeah, and you mentioned Ireland, what's happening there. They, of course, came up, as part of their solution, the bad bank solution, which they go under the acronym NAMA, or as one commentator in Ireland calls it, Vietnama. And it's really an open-ended slush fund in Ireland. They can simply expand the slush fund as the write-downs for these bad debts continue. It's open-ended. And in Greece, of course, and these other countries, it's a variation on a theme. It's basically an open-ended license to steal by the investment banks who are in bed with the governments. Let's move on to global financial crisis. Let's explain a little bit about, because you've written about this on your writing in various places brilliantly. Talk a difference between the solvency crisis versus a liquidity crisis and where we are in that metric.
Well, I think you can look at that on two fronts. Front number one is the difference between people who have fiat currencies and those who don't. And then front number two is between the short term and the long term. So if you look at countries like the U.S. and the U.K. in particular, basically the U.S. and the U.K., the governments are the creators of currency. It's not as if they could ever have a solvency crisis involuntarily, because they create the currency after all. You might have inflation, you might have currency depreciation, but you're not going to have a solvency crisis involuntarily. On the other hand, you can look at the countries in the Eurozone as implicitly having held on to their national currencies and being fixed to the euro, which is essentially like a gold standard. So they're in big troubles because they are users of currency, and they can't actually create any more currency in order to get out of their fix. So they're in a much more deflationary environment, and that means solvency is a question for them right now in the immediate future, whereas in the U.S. and the U.K. it's not. So you can take a look at a country like Japan over the long term. If you think about short term versus long term, they've run up debts. Now they're at 200% of GDP in terms of government debt, and still their interest rates are incredibly low. I would argue that's not a place you want to be. But the reality is that that's the question that people have long term. Is this a solvency crisis in the sense of monetizing this in terms of printing a lot of money in order to inflate the debt away? In the case of Japan, what we've seen is deflation over the last 5 to 10 years. So really, I think that that's the real problem over the long term, even for the U.S. and the U.K.
Right. But one thing which you cannot argue with is that in an economy like the U.S., you do have negative real interest rates. And this is what's driving the price of gold, for example, because purchasing power is dropping, whether you call it insolvency or illiquidity. And even though you're printing trillions, it's not circling or cycling through the economy. It's there's no there's no velocity of the cash. And so you just end up with this huge debt black hole and negative real interest rates, which, of course, is driving people into precious metals. Your thoughts going forward on Spain?
My thought is Spain, they have a problem with private sector debt, not with government debt. If you take a look at Spain versus Germany, Spain's government finances over the last decade have been much better. The thing that you want to avoid in Spain is the socialization of bank losses onto the balance sheet of the government. That would be a huge negative. They should let these banks that are lesser go to the wall, potentially merge them with more solid institutions. But in general, you'll want to get away from Spain if you start seeing them socialize these losses onto the government's balance sheet.
Okay, quick last question to follow up. Gold bullion, safe haven or bubble?
I think it's a safe haven. You see some serious bubble-type behavior going on there, as you might have, say, in 2003 in real estate in the United States, but it continued on for quite some time. The reality is when you have governments printing lots of money, people are not going to want to hold those dollars, those euros, and they're going to look for something else. And gold and other hard assets are places that they're going to find some value.
Of course, it could be a combination of insolvency and illiquidity combined in some kind of new financial surrealism. I think we need to expand our nomenclature somewhat to take into account some of the bizarre topsy-turviness of what we see going on. All right, Ed Harrison, thanks so much for being on the Keiser Report.
Thank you. I appreciate it.
All right, and that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and Ed Harrison. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next week, this is Max Keiser saying bye, y'all.